You know what most people do? I thought they would go left or go right. Most people do both. They'll start on the education side because they want to understand the investment they're making. That's a really smart move. Then they'll start passively investing. They may, in the back of their mind, still think, I still want to do my own deals, but then realize, maybe not, right? Because they're doing well. I mean, if you can get 15 to 20% annual returns without doing any work, I mean, most people are like, sign me up, man, I'm there.
Welcome back to the Massive Passive Cash Flow Podcast. I'm Gary Wilson, your host. I'm so glad to have you back listening to the show or watching, if that's what you're doing. That's great. YouTube, Facebook, LinkedIn, you name it. We have a great guest today, Ken G, who's going to talk to us about multifamily investing. You can do it passively, actively. You know, that's how I got started. I started off with little fourplexes and moved up to 100 plexes, and the rest is history from there. So first off, Ken, I just want to say thanks because I've been looking forward to this. You know, I love getting somebody who's also in the multifamily sector because it's so reliable. You know, it's I know it's not the most glamorous thing in the world. It's reliable. So in any case, welcome aboard, man. I appreciate you doing this,
Well, thanks for having me. I'm looking forward to it as well.
Good. Well, let's, if you don't mind, I always like to start off at the beginning. Like most of us aren't doing what we said we were going to do when we were kids. We were going to be, fireman, policeman, astronaut, what have you. So is there a tipping point for you or a inflection point where you realize, man, you know what, this is what I'm going to do. I'm going to go after this. And maybe you were doing something else beforehand, if you can describe that, that'd be great,
Yeah. So I'll tell you the story. You know what? It's funny you mentioned that. Going to high school, I was convinced I was going to be an engineer like my grandpa. I was certain of that. I took it to the first drafting class and realized, wait a minute, I got to have a perfect line intersecting perfectly with this other line. I said, no, that's not going to work for me. So, and then calculus got me. So anyway, so I bailed on engineering, but I grew up in Toledo, Ohio, got my undergrad in finance because of that switch from engineering. Then I went to Cleveland, became a commercial lender where I spent 5 years as a lender. Then I went to Case Western Reserve at night to become a CPA, right? There's a reason I'm telling you this story because it's still not into real estate. But as a lender and as a CPA, as a lender, I had all my customers who are in real estate. And when you're their lender, you get to see their financials and you can see, wow, they're doing really, really well. And so then I went to Deloitte. The Cleveland office of Deloitte had a massive, massive real estate tax practice. And so there, I mean, if I told you who the people were, you would know them. I mean, they're household names that we took care of. They were obviously doing extremely well. So here I am at Deloitte. I'm a CPA. I'm on the tax side, doing a lot of M&A, a lot of DD work, thinking, man, this is cool stuff. So my kids were really young. This is like 25, 27, 28 years ago. I used to do the middle of the night feeding for my daughter when she was an infant, obviously. 3 a.m. It was great. Her and I, for anybody who's a father out there, father-daughter, and she's wrapped around my little finger. I was wrapped around her little finger, right? Cool time. And it was awesome until here's the turning point now, right? I realized, man, this is awesome. Look at me. I was proud of myself. I did everything right. I got a good job. I went to school. And wait a minute. It's 3 a.m. and this is my father-daughter time. I thought, oh, wait a minute, dummy, you forgot something, right? I realized that my family was going to grow up without me. There's a real possibility of that happening because it's 3 a.m. and my daughter's an infant, right? I should be spending with her. So that was the driving force, right? I loved Deloitte. It was a great place, but working 70, 80 hours a week was tough. And I didn't want my family to grow up without me. I already knew real estate people did really well in real estate. I said, you know what? I got to go figure this thing out. This was back then. There wasn't there was no podcast like this back then or any of that stuff. So it took me a year and a half. I bought 3 small deals, 28, 24, and 22 units each. Sold them 3 years later, made $500,000 and realized, whoa, I cannot believe what just happened to me. I just made $500,000 on the side. Like that was just obscene. That was ridiculous that I could do that. And so that was what convinced me, okay, I think I can leave my CPA profession and go do this. And that's what I did. That was the turning point. I know that was a long story, but everything in life happens for a reason. I mean, look at the career changes I went through. Engineer, never happened. finance
Yeah.
degree, banker, CPA. Now this is all we do. Now my own real estate private equity firm.
Yeah. Let's tell you what, similar background. I started off, I was computer science. And one of the reasons I
Mm.
stuck with that is a lot of my buddies were in engineering. And I remember the first big calculus test that came around. It was like we were picturing a professor up there with a rifle just picking them off, man. That was the end of
Mhm.
their in dreams for being an engineer. And a lot of them switched over to computer science because calculus was a it was an elective. It wasn't required unless you were in
Uh-huh.
hardware. Then it was required. But we were all at the time softwares. You could get out of college with a degree in software engineering, and then people were just fight over you. So
Right.
that's what we did. But in any
Awesome.
case, so by the way, both my kids went to John Carroll in Cleveland.
No way. I took a class at
Yep.
John Carroll. My advanced
Yeah.
financial accounting. I took at John Carroll in the summer.
Yeah.
So yeah, you
It
know
is a,
Case Western Reserve. I'm sure you do.
absolutely. Yeah. My daughter went to grad school there for special ed in a great area. Cleveland's an awesome area to invest in. I have friends up there. In fact, I was just up there last month. Um, to visit one of them who's coming up from Florida to teach here. And I said, hell, drive, it's 2 hours away.
There
But
you
a
go.
great area for everybody listening right now. Write this down. If you're looking for places to invest that's rock solid, steady, Cleveland's one of them. Again, it's not your. Everybody's looking for the numbers, like where am I going to grow the fastest with my equity, and I get all that. But you know what? When you're starting out, cash flow is king. So a place like Cleveland, man, you can't go wrong. So in any case, let's move into um, the the way. How do you invest in multifamily? Like, what's your strategy? I mean, because there's a lot of us out there that do it.
Yeah.
Everybody has their own little nuances, but I'm sure with accounting, I'm pretty sure you saw something in there in your formula that, like, if I hit these three things, it's a go.
Yeah.
Is there something like that you can go back to and describe? Or
Yeah. So what happens with most people in that sit in my chair? I mean, you kind of evolve, right? You usually start off with the heavier value add. So
Mhm.
in the beginning of your career, you're trying to make money, right? You're almost a flipper, but you're not. You're like a
Mhm.
long-term flipper, right? So you would
Mhm.
buy a deal, add value, physical improvements, management improvements, raise the rents, prove out that market, save some for the next guy so somebody else has a reason to buy it from you, sell it, and then just keep churning that, right? So we did that for a very long time. And we still, the secret to making money in any business, whether it's apartments, whether it's anything, is you got to add value to the world. You just have to. And even the newer stuff that we buy now, we're still adding value in different ways, maybe, right? Maybe it's not a heavy value add anymore, but you got to add value. So we know that our formula is if we can get in at close to even leverage and have 200 to 300 in upside over the next 5 years, we can
Okay.
probably hit our return objectives, right?
Awesome.
That's a very high level, right? There's a lot that goes on below that. I'm not suggesting that this is napkin
Right.
math here, but if we are able to find that deal, it will probably work out so that our investors will get generally a 6% cash on cash return and an overall return of about mid-teens over the
Yeah.
life of the deal. So that's the
That is
formula
awesome.
for us.
Yeah. Now, when you were looking for value add, like we've had buildings where solid building, but like they carpeted over these old parquet floors. So we would lift the carpeting
Yeah.
exposed to parquet floors
Yep.
and do some nice things like security doors and just high things like that. We paved the parking lot in the back. It was just a 2 acre parcel, but there
Mm-hmm.
was other properties. One property we found out the basement was a huge building. A couple of buildings actually. The basements were not being utilized. It just that space. We put storage in there, and
Mm-hmm.
people rented it from us probably at the same time.
There you
And
go.
it's
You added
really
value.
exactly. Yep.
Yep.
Garages. We did garages on another big building. We had 30 something garages. And what was odd about that is people that weren't even renting were paying for those. They were looking to store cars, and
Yeah. Yeah.
one guy had a newspaper route and he like tens of thousands of papers, and that's where he had them all shipped. And his drivers would come by and he would ship them out from there. But so when you're doing
Cool.
value add, clearly the object is to raise the value of the property.
Mm-hmm.
But were you doing that through things to increase rents,
Yeah.
or kind of what were some of the
Yeah.
things that you did, if you don't mind?
Yeah. So when you think about running any business, you got income and you have expenses. Well, you can trim expenses, but most of the expenses in our world, they're pretty consistent. You can trim them a little bit, but you can't, you can only squeeze so much blood out of a turnip. The real upside is on the income. And here's why. Like if you take a regular business that makes widgets or something, right? When you sell a widget, that sale price doesn't go all the way to the bottom line because you got cost of goods sold and other things that kind of dilute that. So that by the time you're done, maybe you're getting 20 cents on a dollar in terms of operating income. In the real estate business, if you're living in your apartment and I raise your rent $100, I have no expenses. That doesn't cost me a dime, right? So that $100 falls right to the bottom line. And what we've learned, the formula generally works that if I can add, for every dollar of NOI I add, I can add $17 to $21 in new value because of the way the cap rates work. Well, think about that, $100 rent increase. Now you do that to let's say you have a $200 rent increase over a 5-year period, right? So what is that, $40 a year? I mean, that's not massive by any stretch, right? So $200 over 5 years and you got a 100-unit building. When you do the math and cap that out, I mean, you're raising value by $4 million. That's just insane. That's how the math works. That's why I love multifamily. I know there's a lot of people on this podcast that do singles and doubles, but what I like about multifamily is it's priced in a more predictable, it's not perfect, but a more predictable way. Single families, yes, you're going to make it more valuable, but you're still limited by what the neighborhood says the guy next door paid, right? And yeah, they consider it in our world, but what they really care about is how much income does it generate.
Exactly.
Because that's what you're buying.
Did you know that you can participate in class every Monday? We call it Monday Night Live, 7 p.m. Eastern, with me and dozens of other investor agents from around the country, in fact, the world. Every Monday, totally free. No selling, no recruiting, just straight up education on anything and everything in real estate. And we have a lot of good guests coming on once or twice a month, bringing in expertise on subjects like how to buy a house with crypto. Okay. How about them apples? What about AI? How's AI affecting our business? How about the metaverse, blockchain processing? We're already using it in title work. So come on to Monday Night Live. Be ready to take notes and ask questions because it's live and engaging, and you get to participate by asking questions and meeting others. So we'll see you there. Go to realestatewithgarywilson.com, click on the resource tab, drop down, and you'll see Monday Night Live. And in there, you can see one of the most recent classes. But more importantly, you can register for class as many as you want going up to like the end of the year, I believe. So in any case, do that. We'll see you on Monday Night Live. Look forward to meeting you in person. Take care. It's the income approach evaluation. That's I evolved over the years. I did start off with the smaller properties, 4 and below. I didn't do single family homes for a lot of years. I started flipping them, but I realized, and this, I know I'm going to make people upset when I say this, but flipping is not where it's at. It's your trading time for money. No matter how you slice it, what kind of game you're playing, it doesn't matter. Yep. But with multifamily, like you said, the first big unit I bought was a 90-unit building, and we increased the rents there over $200 per unit over like the next 3 years, $100 and $100 again. Hardly anybody left because we were making them a lot nicer. But when we looked at the return, because of the way net operating income works and income approach evaluation, it was all upside. I mean, we might only add, maybe it was like at the end of the day, I think like what was it, $50,000 a year in cash flow. But if you apply the cap rate to that, I mean, you're looking at several $100,000, $500,000, just to pretty much one move.
Oh, and that's in your $50,000 example, that's at 10 cap. Nobody buys it at 10 cap anymore. Yeah. Right? Yeah, I mean, it's even higher. It's more than $500,000. Yeah. It
would have been a lot more. Yeah. But I fully admit, I sold some of what I sold at the wrong time. I just thought for sure, because I used to do mergers and acquisitions in a large commercial bank. And looking at the numbers, I thought we're heading right for a recession. So I'm gonna get out at the peak. I mean, people were clamoring over each other, and we were doing great. But at the end of the day, it did allow me to do some other things. But I'll tell you this, and everybody listening, this is learn from Gary Wilson. I never really regretted buying any of the properties I bought. Some of them ended up being headaches, but I can tell you this: I regret having sold every single one I sold. I should have kept them. Yeah. There's some reasons why you sell, but I was just basically cashing out. and there's some other things. But in any case, had I had on to them, I'm probably not going to give real numbers, but my net worth would be a lot more. But I
Yeah.
don't know, because
Yeah.
just you keep raising rents, the values keep going up, so what would you say holds most people back from getting their first multifamily property? They're going to get listen to the
Yeah.
podcast, or they get excited, listen to what Gary and Ken says. I'm going to go buy a 50 unit or 100 unit. But what generally stops it? Would you say is the big thing?
Because they can't figure out how to get through the first insurmountable, what they believe to be an insurmountable problem, and that is they don't have the money. That
Yeah.
that I find everybody starting out in this business, they don't have any net worth, probably. They don't have a liquidity, probably. They really don't have any experience because they haven't done it yet. They don't have any knowledge yet, right? So go learn, go get the knowledge. You can get a partner to help you with the experience. But what they can never get over is how can I buy a $10 million apartment building? That just is ridiculous, right? Well, I will tell you that is just a problem you need to solve. You just need to figure out how to solve it. Maybe you find someone, maybe you do the network. Maybe Gary and I get together and Gary's got a bunch of money and I don't have any money. But I'm like, Gary, look, man, he gets to know me and he figures out this guy really is serious. He's hardworking. He pays attention to the details. I said, Gary, I don't have a lot of money. Would you be my partner? Can
Mhm.
can we can you put in most of the money? We use your liquidity and net worth to get the loan. But Gary, I promise you, I'll do all the work and I will not let this thing fail. Right? Well, now
Mhm.
we've just figured out how we solved Ken's problem of not having any money. And now so now what happens is after we buy that property together, now I'm real. Gary was already
Yeah.
real, right? But now he just made me real. And as soon as you get
Mhm.
your first deal, the whole world changes. The least of which is your mindset, your whole
Mhm.
belief system, right? You just can't believe you can do this. When I made that $500,000 and sold those three, I'm telling you, it blew my mind. I was just stunned. I'd never
Yeah.
seen $500,000 sitting in a bank account that I owned, right, at one time. Never.
Yeah.
So that's the problem. People can't figure it out. And so it starts off with the knowledge thing. And then once you get a knowledge, you got to know how to underwrite. You just got to know that. There's no way to avoid
Yeah.
that. And then you just got to solve these problems and be creative about how you solve them. Every single person that's been successful in real estate had the same problem when they started. Very few
Yep.
people start off in this business on the active side. They're rich.
Yep.
If they're rich, they're probably, no, Ken, here's my money. You go do the work. I don't want to do the work. That's
Yeah.
usually how it happens. So every one of these people that you see making a lot of money probably had the same problem you did. They just
Yeah.
figured out how to solve it. So just know that if you really want to do it, any problem is solvable. You just got to figure it out.
Yeah. I agree 100%. It's just, where there's a will, there's a way. And I can think of
Mhm.
all kinds of,
Little sayings.
wisdom statements in the past. But the reality is, if everybody would just take a real honest assessment of where they are in life, where they're, personally, in terms of business, financially,
Mhm.
their physical health, their mental health, where they live, their home, how much equity in their home, what do they have in their 401k, just make it a massive life assessment of where you are now. And when you
Mhm.
do that, it gives you your starting point. Because too many times people are thinking, well, I want to be like Ken or I want to be like Gary, but guys, we didn't start out that way. We started off, Ken was an accountant, I was crunching numbers for mergers and acquisitions and just wasting away,
Yeah.
But
Yep.
all those skills, the talents that we developed in the corporate world, guys, Ken and I both apply them to real estate, and you can too. I don't care if you're a dentist, if you're a teacher. There's something you bring to the table. It's part of your life assessment. Figure out what that is. You'll know what you're starting. And if your starting point is, you know what, the best I can do is partner with somebody and buy a duplex like Ken suggested, where I'm a teacher, they've got the money, I've got the time. We're combining our two resources, time and money, and
Yep.
everybody wins. That's how you start. My first house, right a month after I graduated college, I bought with my roommate Socrates. His dad and I helped us. He didn't give us money. He showed us how to buy a house back in
Mhm.
1986 when interest rates were still through the roof, and we assumed a mortgage. We lived in our two own individual bedrooms, rented out the other two rooms. So we were like the first house hackers, although we didn't hear of house hacking until about 5 years ago. But
Right.
that's how
Yep.
I started. Then I bought my own property. Then I waited because I had babies, and next thing you know, I'm like, I don't want to be in the corporate world anymore. So that's when I bought a pair of a pair of fourplexes. By the end of that first year, Ken, I had 30 units doing it the
Wow.
old-fashioned way, just hard
Wow.
knocks and gray hair and busted thumbs and things like that.
Yep.
But it
Yep.
it got me where I started. Then I get my first commercial loan. It was a blanket business loan across the equity for my portfolio. And I went out and paid cash for the next property, fixed it up,
Wow.
refinanced it, and that was the beginning. That was the inflection point. And it didn't take forever to get there. It only really took about 2 years, probably 3 years, when it was all said and done with that property. I refinanced it, paid off the line of credit, and guess what that commercial lender did for me, kind of on that line of credit when I added that new. It was an 11 unit asset.
What? I'm dying to know. What did he do?
He increased the line.
Of
I
course.
just he just increased it, and that was what I did. And then I partnered with an accountant, by the way. Vince is one of my best friends. He's a best partner I've ever had, and he brought something to the table I didn't have, which was patience, because I'm a natural born cowboy astronaut kind of guy. Just want to,
Okay.
I just want to get out there and hit the gas. And so
Yep.
personal note, I've policemen all over the country know me pretty well. I've got a horrible traffic ticket habit, and
Okay.
just is my style. But well, let's get back to this. So
Yeah.
so now there's going to be people listening here
Okay.
that are starting to think, okay, I have some money. I really don't have the time. I mean, we have a lot of dentists on, engineers that
Hmm.
listen, and
Hmm.
but can they work with you? Is there an opportunity where they can just invest and not
Sure.
have to worry about all the stuff that we're talking about?
Yeah. Yeah. So interestingly, our company, all we do is help people create wealth through real estate. Some people are going to go into our education side, and we're going to teach them every single thing that we do if they want to do what we do, right? To do the deals, the active side. Some people will say the dentist, the physician, the business owner who's busy building his or her own business. Look, here's my money. You go do it. Yes. So either way, right? We've set up the company. So either way you want to go, we can help
Hmm.
you with that because we've raised about $50 million in capital since
Hmm.
inception. So we've distributed about a number 26, 27 million, something like that. We're on our fund number 5. We're just wrapping up fund number 5. This fund between 4 and 5 will be roughly 18 to $20 million that we're going to put into one deal for our investors. So yeah, you could be part of that. Right now we've kind of grown up. We've been doing this for a very long time, like 27, 28 years.
Hmm.
We've grown up. The last 2 deals we bought are basically brand new deals, Central Florida, just out of construction. Beautiful, gorgeous deals that you would be probably proud to live in yourself. So yeah,
Yeah.
either way you want to go. Here's the interesting thing. You know what most people
Hmm.
do? I
What's that?
thought they would go left or go right. Most people
Hmm.
do both. They'll
Okay.
start on the education side because they want to understand the investment they're making. That's a really smart move. Then they'll start passively investing. They may, in the back of their mind, still think, I still want to do my own deals, but then realize, maybe not, right? Because they're doing well. I mean, if you can get 15 to 20% annual returns without doing any work, I mean, most people are like, sign me up, man, I'm there, right? We can't guarantee that. You know that. I have to say that out loud. But
Right.
so yeah, people, if you're looking for a passive investment, we can help you. If you're looking to try to figure out the business, that's the thing about what we do. CPA lender, that shouldn't shock you. I'm pretty detail oriented, and I've
Yeah.
always believed that in fact, every small business owner I've ever talked to, who says that is successful, says they are
Mhm.
successful because they pay attention to those details, and we teach them every single little detail that is involved in our business. Same thing we do, we teach you how to do it. So either way you
Yeah.
want to go, we can help you. And I would encourage people to explore both sides because you never know
Yeah.
where you're going to end up.
Yeah. So when you're on the learning part of it, I'm a huge. I mean, I have a quite a large team. It's not a brokerage. I used to own a brokerage, but I have a team of agents we train them how to invest. We train them so they can learn to work with investors
Mm,
all in 38 states, wherever the 60 biggest MSAs. Um, and I did that really out of frustration. But what we do is we educate. It's an education based business, and I do
yep.
make money doing it. Obviously, they pay me whenever they
Mhm,
have transactions and build relationships with investors. That's what we teach them how to do. They make
mhm.
money, and I get a portion of that.
Awesome.
So the cool thing is they don't pay unless they produce, which means I'm taking the risk. But I can do it,
Hmm.
and I teachings in my family, so it gives me fulfillment. But with your learning, is that a mainstay of your business model, or is it something you ask or require your clients to do if they've not invested before? You want them to learn first before the rest. Or how does that?
Yeah, we don't require that. Again, it goes back to we're just helping you create wealth through real estate. You make the decision as to whether you want to go the active side and do your own deals or the passive side. It doesn't matter to me. We actually on the education side, if one of the things that you need is experience. Well, we love partnering with our own students. I mean, that's awesome, right? Because now we spend a lot of time together. We do a lot of group coaching. We get to know each other. And what's better, right? Remember, I said you and I get to know each other. You solve my problem. I solve your problem. That's what happens in the real estate world. It just does. So that's what we hope. There's no requirement in order to passively invest. That you have to go through our training programs, but it is we do only accredited investors. So we do what are called a 506c fund. So you do have to be accredited, but that's it. That's the only real limitation. And I mean, we're going to spend time with you to make sure that what we do kind of fits with what you're trying to do on the passive side. Because if if we're buying a brand new asset that we know will probably hold 6-7 years, and you need the money back in 2 years, well, I mean, that's not a good fit, right? We got to go through that process to figure that out so that we put you in the right vehicle. And sometimes it's not right?
Yeah. Yeah. Now, what about management? Now, it's two levels of management. One level is the actual facilities management, and the other one is just in managing the assets in a portfolio from higher level. I'm assuming you're playing the latter role, but do you guys get involved with the former, the actual facilities management too, or okay?
Yeah, we're vertically integrated. Our company grew up in Cleveland. Remember, the first part of my story was we grew up in Cleveland. The first 10 deals we did in Cleveland are 10 years. And there's no third-party management in Cleveland because Cleveland just never really attracted outside investment. And that's what you need in order to have a third-party management industry. So we grew up managing our own stuff. And then as Cleveland became more popular, we did some third-party management. And then 15 years ago, we went down to Florida. Everything we do right now is in Florida. And, after 27 years, it's hard to find a property management firm that's going to know as much as we do because we've solved most every problem repeatedly, right? And hopefully systemically solved it. But we also, if you think about it, there's nothing wrong with third-party management. I'm not knocking third-party management. But if you think about a vertically integrated company, I get to go all the way down to the ground to find out what's going on at a property. I don't have to go through anyone. I don't have to, nobody's filtering the message. I can go right to the property, talk to the manager, talk to the leasing person, talk to the maintenance person. And that vertical integration, I think, has been massive for our success and our strategy execution.
Yeah, well, I love it. I two points is one of them. I mean, that's I'll use the analogy of the military. I mean, some of the best leaders in the military were we call them field generals. There was, if you think about the first Gulf War, it was Colin Powell, right, was in Washington, chairman of the Joint Chiefs of Staff, and Norman Schwarzkopf was the general down in Iraq, and it was a perfect combination. But Norman knew what was happening feet on the ground. He was a soldier's general, Yeah. And same thing in property management. I started my own property management company 10 years ago. I had my own team that I built organically, doing my own clean outs and repairs and remodeling and all that stuff, Yeah. And I had people asking me, "Hey, can you manage my property soon?" And I'm like, "No way! I'm not going to manage anybody else's property." Yeah. And finally, I realized, God's trying to hit me over the head again. Another 4x4. Hey, Garris, there's another opportunity. Yeah. And I said yes, and it turns out it was a great business move. I mean, we went to 700 units in 3 years, but we didn't spend a dime on advertising. But the thing is I just had this crazy idea. I'm going to keep my properties going through the system, the platform, just like my clients were. So I would get all the reporting. I would get everything my clients were getting. So I knew what it looked like and felt like, and I could tweak it and make changes and things like that. And one of them caught wind of that. We were out having lunch, and he said, "Wait a minute, you pay yourself?" I said, "Yeah." And he said, "Why do you're gonna spend money on taxes unnecessarily?" I said, "Look, I'm doing pretty good, but I need to know without me having to go through extra effort what's actually happening feet on the ground." One of the best things I've ever done. So I love the fact that consider this an endorsement, everybody. When you find somebody like Ken that's doing it this way, when he knows the properties, he's not just sitting up in a skyrise
Right.
office in Tampa. He's out there, the field
Yeah.
guys. This
Yeah.
is a big deal. So so people want to reach out to you. What's the best thing, what's the best thing they can do to see if this is something they want to participate in,
Yeah.
to work with you?
Yeah, yeah. Go to kripartners.com,
Okay.
kripartners.com, and then check out both sides. As soon as you get to our site, you'll see there's active side, the passive side. We've got a ton of free stuff there. A free underwriting program, a free, basically a multifamily master class, just a lot of things for you to kind of check it out, right? Because we want people want to understand this business because most likely they know somebody who's made a lot of money in real estate. And they're like,
Right.
man, I need to do this. And I want you to I want to provide as much value to you as you can. So KRIPartners.com, or you're welcome to call or text our main line, 216-290-1710. So either one just gets you what's important is that we get a chance to spend some time with you. We're not here to sell you something. We want you to help you figure out what's right for you. That's the goal.
Yeah. It's at kripartners.com.
That's correct.
Yeah, I would do that, guys. Just go out there. It doesn't totally no barriers. You just go out there and
Yeah.
grab what you can grab and learn. Look at both sides. I really appreciate you having the opportunity to do that with Ken to do that. So Ken, I know we're getting close to the magic half hour here, but
Mhm.
any final thoughts or words of wisdom? Something that we didn't go over that maybe you think would really help people, particularly the
Yeah.
newbies. I mean, one of my best friends, his first building was a 94 unit building, and I remember thinking, "Gee,
Woo.
I was only 4 units, and this guy's and he was an engineer, by the way."
Yeah.
But
Yep.
yeah, I remember him saying, "You know what? It's the same formula. It's just
Not
more
wrong.
data, more numbers. It's the same formula." But any
Yeah.
words of wisdom you can think of, or final thoughts?
Yeah. Yeah. You know what? Let me tell you. Number one, this whole business can change your life, right?
Mhm,
Gary, you're able to do and live your life the way you want because of this
mhm,
business, and
mhm.
same here. So just know that you can do that. Now, what you need to do is just get educated. This is a business. It's no different than any other business, right? You wouldn't go to a doctor who never spent a minute learning, right? In med school, you just wouldn't do that. Take the time to learn.
Yeah,
What will happen to you is that belief thing that we talked about that you didn't have when you started, after you learn to
yeah,
underwrite, after you learn how to do the business, that belief lid's going to completely change because you're going to realize this isn't rocket science. You just need to pay attention to the details, the ones that people like us tell you matters, and jump into this business. The last thing I'll say, I'm not trying to be long winded, but the last thing I'll say is
okay,
when I left Deloitte, I didn't do buy one building and then jump off the bridge and leave Deloitte the next day, right?
right.
You can do this on the side because most
Hmm.
people are like, man, I don't want to leave that safety net. You don't have to. You can do this
Yeah,
real estate thing slowly on the side. I mean, Matt, I made 500,000 on the side and then
yeah,
realized, okay, now I'm comfortable. I see how I make money. I understand the business better. I know how I can make this work. Now I can safely cut the tie from the W 2 job or whatever it is that you want to do
hmm,
and do it. See, I can't find a safer way to make that transition than real estate. That's what I really loved about it because I'm
yeah,
always trying to mitigate these risks. I'm a scaredy cat. I don't want to take any undue risks. And I mean,
yeah,
all of those things fit together to put me where I am now.
yeah. At the end of the day, what it comes down to is it has three things going for it that I don't know of any other investment can claim this. It's a tangible income producing
Mhm.
asset.
Yep.
Tangible, meaning it's physical, it's real. It's not just some fictitious piece of paper.
Yep.
Income producing, it throws off cash flow. In asset, it's going to grow in value. Our own homes technically don't fit the mold. They're just, yeah, you could call them assets, but they're not paying you. I mean, you're paying bills every month on that house,
Right.
insurance, taxes, the whole laundry list.
Hmm.
But if you move to another house and you keep that house to rent it out, now it becomes an income producing asset. And now you've got something really special. And because it's tangible, it's not going to, I don't care if the house burns down. The land is still there, and chances are you got insurance on it so you can rebuild the house. So that's
Correct.
why I like it is rock solid, steady.
Mhm.
I have a lot of gray hair. I'm going to be straight and honest here. I got a lot of gray hair because of all the stuff that the tenants. I mean, like, I should write a book on like things tenants do, just for
Mhm.
fun, just for a fun book. We should. I'll tell you what, Ken. We'll get a couple guys together. We'll. I've written 8 books. We'll create a book just for fun, no names and addresses, but the
Yeah,
crazy things people do. But you know what?
you'd be shocked.
Their money. A hole in a wall to me is a money hole. We patch the hole, the property's worth more money. It's a money hole. It's just how you look at it. So, any case, I appreciate you being on, I'm sure are you in Orlando yourself, Central Florida, Orlando
Yeah, no,
area?
I actually live in Cleveland. My back office for our company is
Oh,
in Cleveland, but everything we do is in Central and Northern
nice.
Florida. We got an office in Tampa. We got another office in Miami.
Okay.
So,
I'll well, next time I'm in Cleveland, I'll look you up. And I'm currently right now in a little place called Inglewood. It's between Fort Myers and Tampa, tiny little fishing town. It's,
mhm.
maybe 3 traffic lights, no hotels. They won't allow it, and lots of water. So, but if you come on down to Tampa next time, when I go to Tampa, I actually spoke at the Tampa Club 2 years ago. And in fact, I'm going to meet somebody up there in a couple of weeks, another commercial broker. But in any case, I really appreciate you having you on the show. I think everybody else would say the same things. By the way, for everyone listening, please leave a review. I mean, Ken gave you some golden nuggets today. Good old fashioned horse sense. Just don't reinvent the wheel.
Right.
Just sat alongside somebody that's already been there and done that and can show you how. And Ken G is one of those people. Just go to KRIPartners.com, check it out. Passive or active, either way, it's going to work, and take your next step. So, Ken, thanks again. Thanks for everybody listening. God bless you and all your loved ones, and we will see you on the next Massive Passive Cash Flow podcast.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.